nanti aku bilang.
Jadi share nanti aja.
Pas udah ini ya.
Oh, nggak usah lah, nggak usah banyak. Bangun kontennya gitu nih.
Pagi kan udah datang. Tapi jam 8. Yang setengah 9. Enggak. Di sini itu podium buat di sini aja dekat dem. Untuk butuh aja buat naruh-naruh.
Ini udah on YouTube sih harusnya. Lagi loading. Itu ini YouTube ini. Ini dari Zoom. Kita mute aja. Oke, oke. Coba suaranya MC kedengeran nggak, Pak Incan?
Cek 1 2 3.
Halo Pak, suara saya kedengeran?
Kedengeran, kedengeran, Pak.
Ya, suara Bapak juga kedengeran. Ada
Itu
eko
kedengeran dari
nggak Pak?
speaker yang mana ya? Speaker kanan ya?
Speaker itu Pak, speaker. Oh, bukan keluar dari speaker itu.
Bukan, ini speaker di belakang, Pak.
Belakang
Iya,
layar.
speaker di belakang layar ada mic itu. Itu keluarnya di situ.
Iya, betul.
Tapi gede suaranya.
Kecil.
Iya, Pak.
Kecil. Iya, berarti mic-nya diganti juga. Audio. Bisa. Audio.
Speaker yang mana? Mikrofonnya
Bearingnya nggak muncul ya?
enggak. Ini kali headphone ini.
Ya, ya, ya.
Tes.
Ya, ya pelapanan. Masuk.
Ladies and gentlemen, welcome to today's event.
Oke.
Tes.
Ini switch.
Gimana Pak?
Masuk Pak, jelas di speaker.
Gak ada echo ya?
Nggak ada, aman.
Oke. Thank you.
Oke. Pak, kita mau coba geladi dulu ya Pak.
Pak, kita mau coba geladi gitu.
Pak, kita mau coba geladi.
Kok mati, Pak? Hah? Iya sih, pas kita coba geladi kayak gimana suaranya bagus apa enggak? Maaf ya, Pak. Jadi nggak enak saya.
Tadi
713
713
427.
427.
Iya.
Tak, ntar saya ambil.
Pak, punten Pak.
Minum mau?
Di belakangnya ada di admin.
Enggak jelas sih. Kayak kemarin juga ya. Enggak, nah ini perlu splitter. Kalau ada splitter mah enak banget udah. Iya.
Cuin ke orang kaya Pak.
Udah masuk ya? Pak, ini udah masuk ya?
Di dalam ruang putih. Oh, dalam buku. Tujuh satu.
Kayaknya setelah moderator udah sedih.
713
713
427.
427.
Ntar minta tolong dilihat gambar juga ya Pak di
Iya.
HP itu jelas apa enggak?
Iya. Di admin.
Oh udah ada ya. Iya Pak.
Oh, kabur di sana.
Ada dua ya?
Saya dulu aja. Oh,
Yang tadi.
oh ya udah. Oh, udah masuk.
Udah masuk. Oke ya.
Dan kursinya bukan.
Mau apa?
Halo.
Ya Pak, jelas
Lah.
suaranya.
Geser komputernya.
Enggak, aku yang kesana. Tapi kursinya ke sini.
Kursi.
Coba ngomong.
Iya
Halo,
sih
Pak.
bener.
Oke.
Di sini. Gampang lewat mana? Lewat sini kali Cok. Awas Cok. Ganti punya orang.
Jadi nanti aku ke belakang nih.
Iya.
Taiki dan.
Oke Mas, bisa dimulai.
Oke coba kita mulai nih dari awal ya. Sambil dilihat
Iya.
video. Kita pertama opening video dulu.
Tapi di saya suaranya nggak kedengeran. Oh di mute ya? Di sana ya?
Enggak di mute. Musiknya nggak masuk Pak.
Tampilan gambarnya masih layar zoom aja.
Layar mana?
Layar sofa itu.
Iya, emang bener layar sofa Pak. Nanti kan dia ngelihatnya hanya dari layar sofa, tapi ntar layar ini kan bergerak.
Oh,
Enggak.
tapi yang di layar ya oke.
Di layar fullnya nggak masuk karena nggak connect ke OBS si zoomnya. Si zoom hanya connect ke
Oke.
YouTube. Gimana Pak?
Mm-mm.
Itu paling.
Iya boleh.
Tapi tadi
Ah.
gerak gak Pak? Tapi tadi gerak gak videonya?
Video yang ini yang OBS.
Iya nih coba nih. Di layarnya kan, di layar kan gerak tuh.
Oh iya gerak.
Iya paling dari situ Pak.
Oh dia ngeliatnya dari situ aja ya. Ya boleh. Terus kalau untuk nampilin misalnya tampilin muka saya sama suara saya.
Oke, sebentar.
Oke.
Ini untuk audiens offline.
Iya untuk audiens ya. Paling nanti masnya matiin itu ya, matiin videonya ya biar. Oh, pilih speaker, sorry sorry.
Speaker kayaknya nggak perlu matiin deh biar kelihatan juga kan. Yang mana? Gitu paling Pak. Nggak apa-apa ya. Kalau ada splitter sih enak. Splitter jadi tinggal kita tampilin zoom, tampilin ini gitu. Ya udah nggak apa-apa maksimal begitu. Coba kita,
Pas kita ngomong satu layar aja kan?
iya satu layar aja. Saya duplikat.
Ini yang ini nggak bola kan? Kan tadi ada dua tuh. Kayak dua.
Oh,
Saya sama saya. Bikin satu aja.
Oh, dibikin satu aja bisa kayak gini. Nih. Pin aja. Gini aja kan?
Nah, apa namanya? POS speaker.
Ada nih. Video speaker udah. Siapapun yang ngomong dia pasti muncul ke dia.
Itu suruh video ya.
Yang mana?
Yang lain-lain kan ada beberapa.
Oh,
Ada beberapa.
iya benar-benar.
Belum ada yang join nih Mas.
Belum. Kita coba ini dulu ya. Kita coba. Kita sambil nyalain aja. Iya Pak. Nyalain mic ini aja. Jadi Bapak bisa dengar juga di Zoom. Suaranya jelas apa enggak? Oke.
Suara saya
Gede banget. Bagus sih Pak.
kecilin nggak? Di belakang juga ada mic.
Turunin dari sini paling.
Oh ya udah.
Coba yuk. Kita dari awal banget nih ya. Nah, bentar, nak. Bentar.
Oke, tes.
Ini mana sih untuk jadiin chat as? Duluan. Link Zoom. Enggak link Zoom.
YouTube. Kalau Zoom nanti di panelis.
Udah mulai?
Nah. Nah, kabel berarti ya.
Tapi suara audio dari videonya nggak keluar ya di sini ya? Cuman suara masnya langsung doang yang keluar.
Musiknya nggak keluar, Pak.
Di sini nggak keluar, suara masnya doang. Tapi nggak apa-apa.
Apa
Ini
sih?
yang di Zoom kan maksudnya ya?
Ya,
Iya, yang di Zoom. Kalau yang
Nggak
di Zoom
keluar.
ngandelin dari speaker sini
Yang-
doang. Heeh.
Iya. Berarti nggak apa-apa ya, yang penting
tampilannya.
dia bisa interaksi sama kita ya.
Tapi mic dari mic Mbak Ina kedengeran nggak, Pak?
Coba.
Halo.
Coba Mas, Mbak Ina.
Good morning, ladies and gentlemen. Welcome to our
Kedengeran sih, cuman kurang besar.
suara. Halo.
Udah pakai mic ya?
Halo, 123. Seminar B2B Indonesia. Lagi capital market synergies between Hong Kong and Indonesia. Masuk nggak, Pak?
Sekarang sekarang masih kecil Pak. Ini sini nggak harus masuk kan? Cek tes 1 2 3 cek. Cek tes 1 2.
Coba ya.
Tes 1 2 3 cek. Ini kabel apa nih? Kabel speaker atau kabel apa? Oh, ini saya lihat sana lain. Nah, tidak yang masuk ini cuma yang
Iya, jadi masuk ke sini Mas. Oh, ini mau dideketin aja.
Iya, mungkin deketin di
Situ ya. Keluar dari itu. Coba dari Sony itu.
Oh iya bener, keluar dari sana ya.
Iya.
Jadi masuk ke mic lagi. Itu udah nggak apa-apa. Kita masih ulang itu aja.
Tapi deketin aja coba ya. Kemarin sih jelas ya.
Cek. Nah itu cek. Jadi masuknya sebenarnya bukan dari mic dia, tapi dari situ. Nah ini dia mengandalkan menangkap suara dari sini. Gitu. Ya udah. Cek. Cek. Kedengeran nggak suaranya?
Coba lagi.
Tes 1 2 3 tes. Masuk nggak Pak?
Coba lagi, Mas.
Halo Pak. Suaranya udah jelas? Apa masih
Sudah
kecil?
jelas?
Gimana Pak?
Ya.
Udah ya?
Suaranya lumayan jelas sih, nggak kayak tadi. Coba kalau
Boleh.
ngomong panjang, Mas.
Atau digeser di meja aja, geser di
Geser
meja
agak
putih.
majuan kali ya Pak ya? Dekat meja operator.
Ya, boleh.
Taruh sini.
Sekarang gimana Pak? Udah jelas
Ya.
suaranya?
Jelas.
Oke, ini coba kita gladi ya, Pak ya.
Boleh.
Oke. Oh, sebentar saya share linknya dulu ke Gumilang sebentar. Gumilang. Itu lu share ya ntar ya, tambahin kata-katanya. Cuman ntar nunggu aba-aba dari gua. Ini masih unlisted.
Nanti aja pas acara mulai.
Iya betul.
Flyer.
Pakai flyer, kasih kata-kata apa kayak.
Jadi yang ingin
Gitu ya.
Pak kita coba gladi nih Pak ya dari awal.
Oke.
Suara videonya masuk nggak Pak?
Nggak masuk. Masuk cuma putus-putus kayak putus.
Ya, sinyal.
Nggak masuk.
Good morning, ladies and gentlemen. Welcome to our seminar, Gateway to Asia, Unlocking Capital Market Synergies between Hong Kong and Indonesia, organized by the Indonesian Public Listed Companies Association or Asosiasi Emiten Indonesia in collaboration with the Hong Kong Economic and Trade Office. My name is Ina and I will be your MC today. Only to also extend our greetings to the Honorable Chairman of AEI, Mr. Armand Hartono, the Honorable Ms. Libera Cheng, Director General Hong Kong Economic and Trade Office Jakarta, and our distinguished panelists.
Udah oke ya?
Suaranya masuk nggak Pak? Oke ya Pak? Suara Mbak Ina masuk tadi Pak? Suara Mbak Ina masuk?
Suara aku masuk.
Agak aja atau ngomong sama itu ya.
Aduh sama
Suara video.
Oh yang pas video nggak ngomong tadi?
Oh nggak.
Hah? Layar?
Gak usah
Yang
pakai
ada aja.
ada jack kita aja.
Gimana Pak? Sorry Pak.
Ya udah. Berarti ada yang join belum?
Cek. Nah itu masuk Pak.
Masuk ya.
AEI, bukan
Kalau nggak
AEI.
Pak Inten nggak apa-apa. Masuk
Asosiasi
aja
Emiten
tetap ya.
Indonesia.
Dari sini. Biar ntar saya jadiin co-host.
Dia cuman minta, aku kan ngomong dengan Public Companies or Asosiasi Emiten Indonesia, AEI. Terusnya kan pas AEI dong nih. Itu sih.
Kalau dulu
Ini ada
ininya, ada ya.
dari sini juga gitu.
Oh enggak. Cuma bantu join doang, mute terus dikecilin banget. Udah jadi co-host aja. Nggak perlu juga.
Oh, enggak. Soalnya nanti keluar suara.
Oh, udah ya. Kan itu udah lanjut mulai biar.
Lanjut. To officially open our event, we are honored to invite Ms. Libera Cheng, Director General Jakarta ETO.
Dari HP ada pergantian speaker atau enggak ya?
Dari IDX aja sih.
Oh, kalau HP masih equal.
Ini. Saya dapat info cuman Pak Hartono diganti jadi Pak Teguh.
Kalau HP?
Saya belum dapat info sih Pak.
Oke.
Ada pergantian.
Yang dari YouTube.
Dari YouTube. Bagus.
Oke.
Coba dah. Si Gilang. Coba setel dari YouTube dari situ link kedengeran nggak suaranya? Cepetin. Enggak, Gilang. Ya, lu dengerin aja, cepetin kedengeran nggak suaranya? Kedengeran?
Suaranya
Kedengeran ya, udah sip, mantap.
Dengeran masuk.
Ini gua mute ya. Gua mute dulu ya. Gua mute aja dulu ya.
Halo, Mas.
Ya,
Kalau suara yang
masuk.
dari luar terlalu besar nggak? Kayaknya besar ya? Terlalu besar ya?
Iya, mungkin nanti bisa di ini yang
Kecilin ya?
Mau ngomong lagi Pak, saya turun dari sini.
Oke, selamat pagi, selamat
Oke.
datang semuanya.
Saya atur dari sini Pak.
Oke, sip.
Sip.
Oke, yo, thank you.
Gua deh.
Oke, lanjut ya. To officially open our event, we are honored to invite Ms. Libera Cheng, Director General Jakarta ETO, to deliver her welcome remarks.
Libera.
Thank you, Ms. Cheng. Next, we are privileged to hear from Mr. Armand Hartono, Chairman of AEI, for his welcome remarks. Thank you, Mr. Hartono, for this inspiring word, and we kindly invite Mr. Armand to remain at the front to present a token of appreciation to the Hong Kong Economic and Trade Office as a symbol of collaboration and partnership. We would now like to invite Ms. Libera Cheng, Director General of HKETO, to receive the token. Thank you. We now invite both representatives to remain on stage for a photo session. We now would also like to invite all panelists to join for a group photo afterward. And thank you. We kindly invite you to return to your seats.
Kalau kata gue malah mikir kurang kenceng ya.
We now move to our first panel
Itu
discussion, unlocking capital opportunities for Indonesian companies.
Kurang kenceng.
The session will be moderated by Hilwan Yogi Brahmanda,
Kayaknya mikir kurang
the Business and Attraction Investment Promotion, Hong Economic and Trade Office Jakarta. Thank you to our moderator and panelists for the engaging and insightful session. Our second panel will focus on readiness and resilience, preparing a listing and beyond, which will be moderated by Abhishek Bakshi, Senior Vice President, Head of ASEAN Issuer Services, HKEX. Thank you once again to our panelists for sharing this valuable insight. Ladies and gentlemen, we have now reached the end of the event. We now invite you to stay and continue networking with fellow participants and speakers on behalf of the organizers. Thank you for joining us today. Check. Cek satu ini lebih besar. Tapi ini tiba-tiba ada info cek. Halo, halo. Ya,
Ini nggak jatuh.
ya.
Jadi suaranya tuh kayak apa ya? Kayak suara mbaknya tuh kayak
today's event.
Ya, ada jeda jadi
Nah, beli kayak gini sebenarnya
Iya, harusnya
tanpa operator ini
boleh. Boleh aja.
pasti boleh.
Jangan masalah.
Ah, enggak.
Biasa ini kameranya.
Nah, kalau ini kan nggak perlu operator.
Oh, iya iya.
Bisa juga. Kita di web.
Good morning, ladies and gentlemen. Welcome to today's event. Please proceed to the registration of the
HKETO.
gue udah suruh di login terkenal aja kalau salah segala.
Gua kan ya Kristina makin ho
Ya,
ya.
ya, teks sih.
Ini kami langsung di situ ya.
Itu betul.
Kan dari aplikasi.
Iya. Jadi udah mau sampai berapa jam gitu. Nanti kita pertanyaan lah kalau info ke moderator seperti ini.
Pak siapa tadi moderator pertama ya? Yang kedua mah Pak Abis nih. Gimana cara ngomong yang kedua?
Panggil nggak panggil man. Halo, Vin. Halo. Aman udah, ini udah mau mulai. Thank you ya. Iya. Aman udah, thank you. Ini gue kan. Videonya udah kok nggak berantakan. Iya, tinggal ganti foto doang sama nama. Thank you ya, Vin.
Mungkin tinggal berapa?
Lihatnya di mana? Tiba-tiba buat. Ya ini. Coba ya, ini tapi aku pakai mic.
Oke, kita mulai nih.
Aku nggak pakai mic ya.
Sebenarnya gini, suara itu sampai di sini.
Nyangkut ya.
Ini mic. Itu mau beli zaman gue cuman biar apa kan. Kan harus ada yang tepuk tangan kan. Iya. Videonya terkenal baru.
Harus ada front. Okay, good morning, ladies and gentlemen. Welcome to our seminar, Gateway to Asia, All-in Capital Market Synergies between Hong Kong and Indonesia, organized by the Indonesian Public Listed Companies Association, or Asosiasi Emiten Indonesia, in collaboration with the Hong Kong Economic and Trade Office. My name is in. Okay.
Bisa nggak? Nggak bisa lagi dia.
Also to extend our activities to the Honorable Chairman of the Time, Mr. Armand. Honorable Libera,
Tapi kalau udah nggak bisa keluar nih enak.
Officially open the relations, the partners welcome.
Siapa tuh? Berat.
Yeah.
Berat. Foto dulu kan? Bagus kalau musik aja kali ya.
Ya, biar sambil
Bahas ini ya. Oh, gitu.
Them a warm round of applause. We can introduce listen to
Bentar, bentar, bentar. Pas tadi dia acara apa ya? Musiknya ini fanfare. Astagfirullah. Iya ya. Ini aja ya. Coba pas lagi dia apa tadi? Lagi tanda tangan ya? Tanda tangan foto. Nanti. Oke ya, hampir ya. Kita ulang ya. Ini yang sekarang aja. Iya. Kayaknya ini nggak bisa kecil nih lah. Soalnya kan nggak pisah ya mic ya. Antara mic sama itu bisa ya Pak. Udah ya. Nah berarti ini pas saya ngomong baru nyala.
Jangan sampai invite Mr. Cheng to have the person Pak Libera maju itu nggak.
Di foto kan? Nah, ini aja kita ini. Kalau sekarang ini aja. Oke, chill.
To your seat by two. The session is being moderated by person who will be here. Head of business and opportunity.
Maju kan ya? Nggak ada yang sendiri kan? Pas sudah semua muncul baru deh. Itu aja ya. Kamu udah pernah kedua?
Thank you once again our panelists for sharing the skills.
Ini kapan?
Ya, mereka yang
Tadi gimana ya? Pak, ntar pada saat dari awal perlu nggak dia kita masukin ke sini sekali kali ya? Biar kayak teman-teman juga pada notif ya ada online. Oh, ini ada nih. Oh, nilai nih. Sakit aja ya? Ntar aja dulu.
Boleh.
Diterima nih.
Siap.
kembali.
Oh, Pak Armand.
Ayo kembali.
Jadi ini tuh ya. Halo.
Luar. Dia kali tentang
probably then come down after the very start of every day.
Kita mulai dari mana ya? Si kotak takdirnya. Oh,
Hello, hello. Hello, Christina, testing. Can you hear us? Hello, hello.
ada beberapa. Ini dulu.
We can. We cannot hear you. Hello, hello. Hello. Hello,
Can you
hello.
hear me on your side? Hello?
Yeah, we can hear you. Can
Okay,
you?
great. I can hear you too.
Okay, thank you.
Thank you.
Satu lagi. Ini belum siapa sih?
Dia belum.
Hello, hello. Info. Can you hear us?
Yes, can hear.
Okay. Okay, thank you. If you please turn on your video, just check.
I'm not one of the speakers.
Okay, okay, okay.
Is there another Zoom dial-in I could use? Because my boss is speaking, but I'm not.
Cuma satu ya? Oh, udah ya? Hello, Mr. Anthony Cheng. Can you
Boleh? Belum. Oke.
Good morning, ladies and gentlemen. Welcome to our seminar Gateway to Asia, Unlocking Capital Market Synergies between Hong Kong and Indonesia, organized by the Indonesian Public Listed Companies Association or Asosiasi Emiten Indonesia in collaboration with the Hong Kong Economic and Trade Office. My name is Ina and I will be your MC today. Allow me also to extend our greetings to the Honorable Chairman of AEI, Mr. Armand Hartono, the Honorable Ms. Libera, Cheng, Director General Hong Kong Economic and Trade Office Jakarta, and our distinguished panelists. To officially open our event, we are honored to invite Ms. Libera, Cheng, Director General Jakarta ETO, to deliver her welcome remarks.
Okay, good morning, everybody. This is a full house. I'm so glad to have all you be here. So, Mr. Armand Hartono, the Chairman of the Indonesian Public Listed Company Association (AEI), Mr. Tengku Fahmi Arianda, Vice Director of the Listed Companies Regulations and Services Indonesian Stock Exchange (ADIS), Mr. Kelvin Tay, Senior Vice President, Head of Asia Global Issuer Services, the Hong Kong Exchange and Clearing Limited. So, and of course, all the distinguished guests, ladies and gentlemen, it is my great honor to welcome you to this seminar, jointly organized by the Hong Kong Exchange and Clearing Limited, Hong Kong EX, that is better known to you guys, and the Indonesian Public Listed Companies Association. It is my privilege here today in a room that reflects the very essence of what makes capital markets thrive. That is connection. Capital markets do not exist in isolation. They grow and prosper when ideas, opportunities, and people come together. And today we are here witnessing that enormous potential of connection, bringing together Indonesia's elite and dynamic listed companies and Hong Kong's sophisticated and vast markets that connects business to the world. It is also timely that we meet today. Our chief executive, some of you may know, has just announced the policy address yesterday, while Indonesia has also gone through some very political turbulence recently. So yet, we see Indonesia's capital markets has shown remarkable resilience. The strong domestic fundamentals and a very young and tech-savvy population has provided good base for continuous growth, and entrepreneurs, including listed companies, are seizing opportunities to expand their capital assets for future growth and also seeking ways to connect with global investors and markets. Hong Kong, for our part, continues to reinforce its position as a leading international financial hub. Over the past years, as reinforced in the recent policy address, with full support from our motherland and our unique position under the one country, two systems, the Hong Kong government and financial regulators have introduced a series of measures to strengthen the competitiveness and attractiveness of our capital market. During the past years, we have been doing very good, and please allow me to name a few of our unique edges and market significance. The first is, of course, the IPO momentum. In 2024, Hong Kong Exchange hosted 69 IPOs, raising 87.6 billion Hong Kong dollars, that is $12.2 billion US dollars, an almost 90% increase in proceeds from 2023. This momentum has continued and actually accelerated in 2025, where we already have 42 main board IPOs who have raised of 107 billion Hong Kong dollars, that is $13.7 billion US dollars in the first half of this year. And this is already surpassing the total proceeds of 2024. And you may recall some big names, such as CATL's $5.3 billion US dollar Hong share offering. And as of July 2025, the total IPOs funds raised in Hong Kong reached 127.9 billion Hong Kong dollars, underscoring Hong Kong's renewed role as a top global fundraising venue. The second development that most of you may be very interested in is our mainland China Stock Connect programs. This has actually really deepened our integration and liquidity. In 2025 alone, over 120 billion Hong Kong dollars of net inflows were channeled into Hong Kong equities through Stock Connect. Swap Connect also turned over reached renminbi 6.5 trillion in notional by April 2025, while Bond Connect, another scheme, expanded its southbound access to a broader range of mainland institutions. And for bond markets, Hong Kong's bond markets remain very robust, with US dollars 132.9 billion in new Hong Kong dollar debt issued in 2024, and 8.8 year-on-year increase. The city also remained the leading hub of offshore renminbi bonds, that is the dim sum bonds, better known as, while also expanding multi-currency offerings, including government and corporate green bonds in US dollars, euros, Hong Kong dollars, and renminbi. And for our renminbi and multi-currency ecosystems, we have initiatives such as the Hong Kong dollar renminbi dual counter model, and enhanced renminbi liquidity facilities continue to strengthen our role as the world's leading offshore renminbi hub. And we have several milestones, such as our Airport Authority Hong Kong recorded $7 billion multi-currency bond issued in January 2025, which highlights our capacity to host complex global offerings. And one of the other development that you may be very interested in is our stablecoins development. And for Hong Kong, in May, we have enacted the stablecoin ordinance, and it has already taken effect on the 1st of August. This stablecoin ordinance established a comprehensive licensing regime for reference stablecoin issuers administered by the Hong Kong Monetary Authority, HKETO, and it includes stringent know your customers requirements, including verification of every token holder's identity, thereby enhancing investor protection and financial stability while fostering responsible digital assets innovation. So taken together all the figures that I just mentioned, we have shown the world that we have brilliant performance. Our stock market has risen a lot, and we have very good connectivity with all the other markets, and we have very deep markets, and you can enjoy multiple access to many other facilities. And Hong Kong, I'm sure that once again has proven ourselves as an ideal platform for international expansion. So for Indonesian companies, this represents not only access to global capital, it also represents an opportunity to participate in a financial center that is continuously evolving, innovating, and positioning itself at the heart of the global market connectivities. And furthermore, the chief executive has also just announced that we will continue to strengthen our role as the international financial center and trade center by introducing more products, clearer and more friendly rules, and making more friends. To name a few of the initiatives that was just announced yesterday, so we will continue to thicken and widen the financial market by exploring shortening the stock settlement cycle to T+1 and expediting the building of an international gold trading market, establishing central clearing system for gold, developing new products such as tokenized gold, and we will also explore the signing of new investment agreements and other agreements with Saudi Arabia, Bangladesh, Egypt, and Peru, and expanded the network of economic and trade office to cover Latin America and Central Asia. So I'm sure the other elite speakers and also our speakers from the Hong Kong Stock Exchange will talk more on the various initiatives and opportunities available for the entrepreneurs here. So today's seminar will also provide insights for Indonesian enterprises on strategies for connecting with international investors and raising capitals in global markets, and best practice in governance, disclosure, and operational readiness for companies considering international expansion. So before I close, I would also like to thank Hong Kong Geeks and AEI for their close partnership in bringing this seminar to fruition, as well as our distinguished speakers, panelists, who will generously share their knowledge and perspective today. I would also like to thank all the corporate leaders, regulators, investors, and market participants here. Your presence today is a testament to our shared commitments to dialogue, collaborations, and trust across borders. So ladies and gentlemen, this seminar is more than just a platform for discussion. It is an opportunity for us to exchange ideas, build partnerships, and shape the future of stronger, more connected capital markets. And finally, I look forward to exciting and very insightful speeches and panels to be held later on. And with that, I wish you a productive, insightful, and inspiring seminar. Thank you.
Thank you, Ms. Cheng. Next, we are privileged to hear from Mr. Armand Hartono, Chairman of AEI, for his welcome remarks.
Good morning, 早上. Assalamualaikum warahmatullahi wabarakatuh. Salam, Om Swastiastu, Namo Buddhaya, salam kebajikan, dan salam saldo selalu cukup. Pagi, good morning, and thank you very much for the intro and explanation from Mr. Libera Cheng, Director General of Hong Kong Economic Trade Office, Jakarta. Thank you very much. Mr. Kevin Chiu, Senior VP of Head of Asia Global Issuer Services, Hong Kong EX. And thank you for coming to the event, Mr. Toku Fami Ananda, Head of Listed Company Regulation and Services Division of Indonesian Stock Exchange. And thank you, Mr. Dixon Chan, Managing Director, Head of Corporate Finance, CITIC CLSA. Mr. Alexander Satopoulos and Ms. Christina Sami from Baker McKenzie. Pak Oki Stefanus and Pak Isan Metakin from EY Indonesia. Mr. King, who co-head the Depository Receipt Group Asia Pacific, and all of their colleagues and all members of our IAE, Indonesian Public Listed Companies Association, all the law firms and everybody else, thank you very much for coming to the event. It's an honor to be here this morning and we have this topic on Gateway to Asia. In the world, we all know the biggest capital market by far is still US. And then we have all the other big markets such as Europe, and then of course in Asia, there's Latin America, and then Asia will be the China, Korea, Japan, and of course India, and not the least, it will be what people will be talking about for growth in the next 20 years will be ASEAN. And within ASEAN itself, the largest country in ASEAN is Indonesia. It's still having a population growth for the next possibly 20 years. if Indonesia can take the opportunity on that positive demography, there should be growth for consumer goods, for job market, anybody looking for labor. And Indonesia do have some natural resources, nickel, gold, coal, plantation, and so on. So Indonesia will continue to be an important market 20 years later. And Hong Kong itself has proven to be a very resilient hub since a few decades ago, for the last century pretty much, for trading, and then it became trading for capital market. Especially it stays to become a very important hub for capital market connecting Europe, global to Asia, especially China. Until today, we can see that Shanghai stock market, of course, has grown a lot. But if we talk about gateway connectivity to global market, Hong Kong is still top of mind. And if you look at how the universe survives, we learn from forests, like in the Indonesian tropical forest. They've been around for ages. They're very resilient because they're connected. Then all the big trees, the mother trees, the small trees, they're all connected through their roots, and their fungus is connecting the network through the earth, creating a very robust, the most robust trading network in the world. It's not the stock exchange. It's a tropical forest. They trade water, mineral, antibody, sometimes send poison for war here and there as well. But they're still the most sophisticated market in the earth. They're the tropical forests in Indonesia and in Latin America. But so what we learned is just being connected, build resilience, especially in today's very uncertain market. Just one person tweet and it changes the whole global picture of a trade tariff. Can change a lot of things. So the key for survival for any market would be connectivity to more markets, whether it's for capital trade, goods trade, job market, information, knowledge, and connecting people. Now, for sure, more than half of the world's population will be here in Asia. And so having these gateways in Asia, several gateways, Hong Kong, Singapore, Shanghai, Indonesia, the more we're connected, the more resilient we'll be. So it's a good start for today that we can talk about more like a strategic dialogue and how we connect together to the future and let nature grow everyone within the ecosystem. We should commit to build bridges between Indonesia and Hong Kong, connecting the people, and then the businesses, the trades, and of course the capital. We are IAE, Indonesian Publicly Listed Association. We have about 700 listed members, which our mission is really to strengthen Indonesia's capital market ecosystem. We will work together with authority to hopefully advocate for policies which support business growth, enable our members to be more competitive, have global access, and also create jobs for the nation. And of course, because we are truly globalized, we cannot be just confined by geography and say isolated just within Indonesia. I myself am also the Vice CEO of BCA, Bank Center Asia. I look at my own portfolio and our company. The 80% of the investors are already global, which started as only the domestic, and the global investor has been growing in Indonesia as well. I'm sure for most of the other Indonesian publicly listed companies here, we'll talk to you. You're looking for more diversified investors elsewhere, not just the usual one that usually come to Indonesia. We should also be proactive to go to meet them elsewhere. And if you talk about connecting to China and some other market, Hong Kong has always been top of mind. I think it's a good idea. We learn something from Hong Kong environment and ecosystem, what we can do together to connect and see what can benefit and create synergy within both systems. So we'll have global connectivity, cross-border collaboration, and again, most important is resilience. Sometimes we forget. We talk about so many things about what's most important for ourselves, for our company. We want to go for profit. We want to become the biggest in something. But actually, it's quite simple. If we hold our breath for 30 minutes, we will be reminded what is the most important thing in life, which is life itself. So building resilience is still the most important thing, no matter what. No matter what country you are, what company, organization, or what individual, the first number one basic rule is first to live. And to live, there's no way we can live alone. So building resilience is still top of mind. And hopefully with the synergy, we'll create capital flows, which connects everybody, job creation, stronger economic growth for the countries. And hopefully with today's discussion, we'll start with simple chat. And please feel free to have questions to all the participants and the speakers. Thank you very much for all the speakers who are willing to spend their time to share. And lastly, as a chairman of the association, I remind you to encourage everybody to actively engage, ask questions, share your thoughts, your worries, if anything, or explore any potential collaboration. We may not know all the details yet, but with discussion, we will start to plant the seed. And as we cultivate, one day it will bloom and bear fruit. Thank you very much. We'll have the fruitful discussion today. Maju terus, emiten Indonesia. Thank you.
We can to present a token of appreciation to the Hong Kong Economic and Trade Office as a symbol of collaboration and partnership. And we would now like to invite Ms. Libera Cheng to receive the token. We now invite both representatives to remain on stage for photo session. We would also like to invite a panelist to join for a group photo afterward. To all panelists and speakers to join photo session. Please give them a warm round of applause. Okay, we can invite you to return to your seat. We now move to our first panel discussion on lucky capital opportunities for Indonesian companies. The session will be moderated by Hilwan Yogi Brahmanda, Head of Business Talent Attraction, Investment Promotion, Hong Kong Economic and Trade Office, Jakarta. Mr. Hilwan, the place is yours.
Good morning, everyone. I am privileged to welcome you to the first panel discussion on the unlocking capital opportunity for Indonesian companies. Today, we'll explore how Indonesian companies can seize opportunities in the evolving capital market by strengthening the market fundamentals at home and broadening the investor bases through dual listings and capturing the momentum of the Hong Kong IPO market. And today we are joined by a group of distinguished panelists. The first panelist is Mr. Cheng, the managing directors of the Head Corporate Finance, CLSA. And we have Calvin Gill, Senior Vice President, Head of Asia Global Issuers Services, HKETO. Lastly, we have Tengku Fahmi Arianda, Head of Listed Company Regulations and Service Divisions, Indonesia Stock Exchange. So here's how we'll proceed. So I'll start with the first round of questions and to stage the discussions, and followed by the deeper dive discussions into more opportunities and dual listings and readiness. And before we wrapping up, we also hear from each panelist on the advice for Indonesian corporates. And if time allows, I'll take one or two questions from the audience. And I was informed by the organizers that we'll put up the barcode for anyone who would like to raise the questions. Just send your questions. And to kick things off, let me begin with Dixon. Dixon, so what are the key success factors for Indonesian companies looking to tap into Hong Kong capital markets? And how do global and investors, global and Hong Kong investors currently perceive Indonesians' opportunities?
Thank you for the question. Good morning, good afternoon, everyone. I'm Dixon from Synergies USA. I think it's a very good question. I can talk about this for probably 2 hours. I'll try to keep it shorter than that. I think first of all, we have to look into the fundamentals of the company. I think that's the first thing for what investors and regulators will look at from time to time, or all the time. When we look at stocks, fundamentals come first. So your commercialization path, your business sustainability, your profitability, and your growth prospect in the market will be the key things for every single industry or every single market we look at. So that, I think, would be the key factors that we have to focus on. So in particular, when we explore something outside of Hong Kong, outside of China, which we're not familiar with, we spend a lot of time understanding the market. Where are you in Indonesia? Where can you go beyond Indonesia? Is your margins better than others? So these are the key factors that I would always say is fundamental things that we have to look at. So for a company to seek a listing in Hong Kong or other countries, sorry, Kelvin. So I love to advertise Hong Kong, but I have to straight give you a more balance because when you look into capital markets, every single capital markets in the world have different niche. Of course, Hong Kong has basically everything. I would say that's definitely the best capital market platform you can look for. But for Indonesian companies to succeed in Hong Kong or elsewhere in the market, you've got to look at the fundamental first. So first of all, how do you do in the local market? Are you at the glass ceiling that you can go beyond what you're making in terms of revenue, your margins, and things like that? That would be key. Second thing is on the local regulations. Are the government or the policies being friendly or supportive to us? When we look back 10 years, 20 years, 30 years ago in China, they have a lot of incentives for the corporates to build. Say, for example, they give you a tax exemption. They give you subsidies for your land and buildings. These will help you with your balance sheet, with your profitability, at least for a short term, say 5 years, 10 years. Of course, the government would not subsidize you forever. But at least in the near term, we can see that as a key factor for good companies to grow the market. And then I think the third thing is, I got to say, why Hong Kong, right? Today we invest Hong Kong with Calvin Exchange. Why Hong Kong? Hong Kong has always been a super connector. When I started my career back in 2000, it's mostly Hong Kong and China. We were bringing capital from Hong Kong to China. And then later on, the Chinese companies come to Hong Kong. So these are the super connector that we did back 15, 20 years ago. Back 10 years, maybe our mandate is to bring the US companies or US listed companies back to Hong Kong because there are a lot of homecoming IPO. And I think for this year and the next 5, 10 years, a key thing for us as a banker is to find good companies outside of Hong Kong and China. For example, Indonesia and other Southeast Asian countries, to come to Hong Kong for listing. But we need to give a lot of reasons for you to come. So the Hong Kong Stock Exchange has put a lot of policies to invite companies in Indonesia, like the IDX and Hong Kong Exchange of the MOU. And then likewise, we're looking to other companies in some other Southeast Asia countries to come for listing. The key factor is Hong Kong is doing much better today versus what we did 2 years ago. This is my third time in Jakarta doing seminars. I still remember back 2 years ago, I wasn't here, but somewhere around IDX, we were doing a seminar. After the meetings, after the seminar, we talked to some of the corporates. They were like, why should I come to Hong Kong? Your market has very low liquidity at that time. We were trading at about 10 billion US per day, versus today is 40 billion, if that number is correct. Yesterday, we see a high at about 300 billion Hong Kong dollars, right? So the market has changed a lot in the last 24 months. So this is the very key factors for companies to consider coming to Hong Kong, because the market has good valuation, good liquidity. I think in the whole Asia Pacific, we perform the best. If you look into the US, are we really that lag behind versus the NYS and Nasdaq? Not really, not really. We have a lot of good companies coming, like what Libera mentioned earlier. We got HKETO coming to Hong Kong this year, and we got a lot of other bigger companies to come to Hong Kong. So I think for investors, to get to the conclusion is, I think investors look into your growth prospect, your profitability, and what you can bring to them in terms of valuation. Because every single investors do not look into the short term. They look at you, what will you be in 2, 3, 5 years, 10 years down the road? You got to look forward. If you look at one stock and then you can think about how the market would rally. Tencent, everyone knows Tencent, right? In 2021, they were at $700 per share, Hong Kong dollars. It was down to about around 200 maybe. And yesterday it closed at 660. So basically they are back to where they were. So the market is back. So if you have the confidence and the patience to hold on to the stocks when it was down in 2022, and for that 3 years, it rallied back. This is what investors will look at. Long-term investment in the quality stocks that can bring value in the long run. So that would be my conclusion. Thank you.
Sure. This is a follow-up question. So any concrete example how Indonesian companies have done well or struggle with when they're approaching the Hong Kong investors?
I think in Hong Kong, we haven't seen a company solely focused on Indonesia and listing in Hong Kong. We're looking into a couple of opportunities in other Southeast Asian countries like Thailand and Malaysia. But let's look at some cases back 10 years ago. For example, Singapore listed company coming to Hong Kong, or Singapore base or headquarter company in Singapore coming for a listing in Hong Kong. We do see one obvious thing is when they decided to come to Hong Kong, the valuation started to boost up. The major reason is that the market gives them a different valuation, what I call unlocking or unleashing the value of the company. This is very important because Hong Kong as an international market, it can bring a lot of different investors from the world that will give you a better valuation. I was actually in Malaysia 2 weeks ago talking to a listed company. They're thinking about coming to Hong Kong. When I asked them, what's your investor base right now? They tell me, all Malaysians, not even Singapore. So this is why we need to go beyond our own country is you would get a lot of attention from the international market, a lot of international investors into your portfolio that can help you expand, not just financially, but your global presence in the capital markets and your business as well.
Thank you, Dixon. Especially your point about the investors' perceptions. So once appetite is there, the role of the exchange becomes very critical. So Calvin, let me turn to you. So how does the HKEX position itself to attract Indonesian issuers? And what the unique advantages can listing in Hong Kong provide in terms of liquidity and investor reach?
Okay. Thank you, Kevin. And good morning, everyone. It's a very interesting question. And perhaps, as with all companies with a story, I can kind of lay out a little bit of a story of what has been happening recently as well. The positioning that Hong Kong EX have today, it's really through many events that have happened. One such event really was last year in September, where we saw a large company called Medea list. They were listing $4.6 billion US. It was an appliance company that was having a global reach. It was an interesting case because since 2021, the markets have actually been on the down. That transaction saw two key things. One, we saw more than 60-70% of the demand coming up from international investors, meaning US investors as well as European investors. Two, we saw a huge performance of that in the post-market. But more importantly, from that standpoint, that performance was also driven because there was the company in itself, when it was looking to raise funds in Hong Kong, a large proportion of the proceeds was really to drive its overseas expansion. Fast forward to this year, what we have seen is two things again. One, in the first half of this year, the bulk of the companies that have listed in Hong Kong, most of their proceeds have actually been used for overseas expansion. Meaning the previous ideology that, hey, if I were to list in Hong Kong, I must be part of China. Otherwise, why bother going to Hong Kong? But in the first half, and since what I mentioned about since September of last year, that is not the case. Investors globally are now coming up to the Hong Kong exchange to not only invest in China, but more importantly, they're here to invest globally. And I think this is a huge, when we kind of look at the liquidity profile, as what Dixon has mentioned, a long time ago, the Hong Kong exchange was trading at $10 billion US a day. And today it's far cry from that. On a relative basis, most exchanges in Southeast Asia trade about $1 billion US a day. London trades about $6 billion US a day. India trades about $10 billion US a day. The Hong Kong market actually recently has touched close to 40 billion. I think on the last count I saw 2 weeks ago was 36 billion US dollars a day. So we are about 6 times larger than London and 35, 36 times larger than exchanges here in Southeast Asia. That liquidity coming in is huge, and it's coming up from international investors. And I've mentioned just now earlier, these investors are coming to invest on the Hong Kong exchange for global thematics. Most of them continue to kind of invest in US, which is a deep, deep market. In fact, it's the deepest market globally. But people are looking to risk manage and to diversify. And the next exchange that they want to do that from a risk management perspective is in another deep liquid market. It now so happens, very fortunately for Hong Kong Exchange, to be in Hong Kong. And so what we see as a positioning is, as we've been mentioned, we're a super connector. What that means is, now that since global investors are coming to Hong Kong to invest globally, can then, as an Asia exchange for Asia, can we then provide Asian stories, especially Southeast Asian stories, and more importantly, Indonesian stories, to list in Hong Kong, to allow global investors to invest directly in Indonesia from a global landscape. So as a case in point, in 2023, the IPO companies coming to list in Hong Kong, their exposure to overseas is about 15%. 2024, it was about 25%. Today, when we look at the first half, we see more than 50% of the funds raised being for overseas expansion. So this really begs the question right now of whether Indonesian companies can really then use the Hong Kong market to tap into this global exchange, because investors are looking to diversify and not just invest in Hong Kong companies or China companies, but really they're looking at investing in global and Asian companies right now as well. And so we see this as a very, very unique opportunity for Hong Kong Exchange to be a complementary exchange. Yes, list on IDX because your brand name, your market is very vibrant and has a strong support for domestic names. But also, tap into Hong Kong, where it's a global exchange, it's a US dollar denominated exchange, where global investors will come in and be able to participate in Hong Kong into Indonesia. What does that mean for companies? That means a company can actually have a rupiah platform, but also they can have a US dollar denominated platform. So it's not a pick and choose. You can pick both. It might not be at the same time, but at different times, you can actually kind of choose different platforms to then go out and expand yourself, whether it's locally or globally. And I think this is also very helpful because then it also allows direct foreign investments to come in straight into the company to actually grow the company bigger and stronger for local. And so I think that's the positioning that Hong Kong is looking at. It may not have happened in the last 10 years, but today we have the opportunity to collaborate together very, very much closely with Indonesia as well. So today, lastly, I think I would say just from a statistic perspective, Hong Kong is now the #1 IPO fundraising hub globally. From a liquidity standpoint, I have mentioned as well, outside of the US, from a global market standpoint, we are the #1 in liquidity as well. So as an Asian exchange being part of Asia, we feel that this actually allows a very unique opportunity for Asian exchanges to come together and provide the unique Asian stories to global investors together and using Hong Kong as a partnering platform. Thank you.
Or there is any recent case where Southeast Asian company successfully tapped the liquidity in Hong Kong?
So I think it's very interesting. I mean, we have had multiple Southeast Asian companies, and as Dexter mentioned before, this is not new. 10, 15, 20 years ago, we've already had multiple companies, specifically in Southeast Asia as well, listing in Hong Kong. Recently, obviously, we have seen logistics companies like J&T Express from Indonesia that's in Hong Kong. This first half of the year, we've seen an aluminium company called Nanshan Aluminium that is an Indonesian mine where revenues is 100% in Southeast Asia, lives in Hong Kong and done very, very well. We even have a Kazakhstan company, tungsten mining company that listed in Hong Kong a couple of weeks ago, that it was simultaneously listed in their local exchange in Astana. And it did very well. On the first day, it popped 177%, and it continues to kind of go up. Now, when you hear stats like that, you wonder, is it a bubble? Can it continue? Right? But Hong Kong is a very interesting exchange because it's predominantly an institutional investor exchange, which means it has, from a valuation perspective, it needs to make sense. That's why investors continue to kind of buy and support the company. It's not really retail that actually swings it. The long-term support and the sustenance of the performance is actually from institutional investors. So this year, as what Dixon has mentioned, the performance of Hong Kong has actually been driven by institutional investors. Hong Kong Exchange, yesterday I saw the HSI has year-to-date is up 33%. The tech index is up 40%. The healthcare index is up 90%. And the biotech index is up more than 100%. This is the index. And why I'm saying this is the performance have been across the board, across sectors, right? So when liquidity pools come in and the tide comes in, all boats lift up. And we're hoping that all these boats lift up is actually going to be helpful to attract Indonesian companies to come as well, to be part of that liquidity floating up as well. So I think one of the last points I'll raise is we see companies like people, some are young and fast growing like Kopi Kenangan. Some are very established and developed like BCA. But at any point in time, we see the exchanges like swimming pools. Hong Kong is a swimming pool, IDX is a swimming pool. How wonderful would it be if there was a slide that connects both, that a company, regardless of age, can go use the slide to tap in and have fun in both pools, and enjoy both pools throughout their journey as a listed company. And we feel that it's a community, right? As everyone knows with children, you raise a child, it takes a whole village to raise a child. And this village, we believe, includes all participants, whether it be the investors, whether it be the law firms, whether it be the auditors, whether it be the bankers, whether it be the exchanges, whether it be IDX, Hong Kong EX, or OJK. We believe we're one community. And it takes a village, it takes a community to go far together. And so we hope, this is definitely not the first step, but we hope we continue together as a community, together to walk in this journey to make Asia great and to develop together as a community.
Thank you, Alfredo. Excellent point. You mentioned about the avenue to bridge between the domestic and international investors is through dual listings. So let me hear from Tupo Fahmi on the IDX. Fahmi, how's the IDX view the potential of the dual listings with HKEX, and what key considerations should Indonesian companies or corporates weigh before taking this step?
Okay, thank you. That's a good question, I think. But first, I think I will say thank you for the opportunity for IDX to be sharing here. We are discussing about potential of our listed company to increasing the capacity by seeking other opportunity in terms of funding globally. And maybe I will start from the story of I think you already know that Indonesia IDX have a lot of cooperation with Hong Kong Stock Exchange, and one of them is Hong Kong Stock Exchange already have recognition for the Indonesia listed company in terms of if Indonesia listed companies want to do a fundraising in Hong Kong, it will be more easier because we already get a recognition to become a secondary IPO in Hong Kong Stock Exchange. That's the first that I want to say. So, and then talking about the dual listing itself, but before I get into the dual listing, I think I have to update something also because when we are open the gate, we have to ensure that our infrastructure also already good for the new coming investor. I mean, we have to ensure that our investor protection, for example, in the IDX is already in place and already when we open the gate, it not have a bad experience for the community, the international community. So I will start from what we are doing in the past 2 years, if I can get a little bit past. We creating you already all of participants basically come from listed companies. I believe you already know about watch list board and why we creating this watch list board. This some of our strategy to increasing investor protection in Indonesia also. I know it's still some contradiction about this idea, but one of the criteria in watch list boards is about the liquidity itself. So basically, if the company happen to have a bad liquidity in the market, we move it in the watch list board. And what the purpose of that? At least for the investor eyes, they can easily looking for to make a differentiation which company that have good liquidity and which one is have not too good liquidity. That's the first step. And then last year, we adjust our minimum of free float requirement, especially for the main board. So if you notice, we just make the requirement of free float, since free float also always translate to the liquidity of the market also. We adjust the requirement for the main markets to be more higher. So that's make our composition for the main market and development board. Currently, it's quite different. Previously, maybe one listed company in main board equal to one listed company in the development board, the ratio, and now it's almost half. And what I mean by that, so we have to ensure the infrastructure, the ecosystem in the domestic also already in a proper way. So when we are inviting like a global investor, we have to ensure we can there is no risk to we lose the trust from the global investor. And talking about dual listing also, we believe this is also the way because we want to invite more liquidity in the markets. At the end, if the liquidity itself can be improved in the markets, we believe the resilience of our capital market also will be good because right now in IDX, if you compare to the regional, I mean ASEAN for the example, currently Indonesia capital market is one of the highest in terms of the capital markets. So all eyes, maybe all investor eyes now looking for the Indonesia capital market. And that's happened when we are doing a roadshow, for example, to China about a couple months ago. Also, last year we are doing a roadshow in Hong Kong. The feedback from the investor is surprisingly very high. They want to know a lot about Indonesia listed company. Yes, of course, there's like barriers in language, for example, barriers in financial statements, how they read the financial statements. But it just, I think it's just a problem that we can solve one by one. At least the opportunity is, we see the opportunity is very big, very good in there. And this is just like what we are doing with Hong Kong Stock Exchange is just one step to make it more closer. And also for the listed company, a lot of like you also can consider like doing depository receipt in Hong Kong. That's one of the options. But we always say if you are doing a dual listing in every other jurisdiction country, besides of the benefit, also come the consequence. This is something that you have to assess in the beginning because that will be two different jurisdiction. That will be you have to understand the second jurisdiction that the secondary listing that you want to be listed. But I believe if you can mitigate that risk, so dual listing is one of you can focus to open new channel for doing fundraising globally. Thank you.
So IDX has been pushing or putting more effort to work stronger readiness at home. So any take from Dixon and Kevin Gill? How critical is it for investors when they evaluate the potential Hong Kong listings?
Yeah, I think that's a very interesting question. I think one of the key things is what we view the regulations, especially IDX and OJK, is actually very market-oriented and very market standard from a global standpoint. And on that basis, as what Pak has actually kind of mentioned as well, when you assess going on to another location, there will be differences, I think, in terms of requirements. I believe that as a listed company, that if you are already listed or can be listed in IDX, I think there will be very limited issues that cannot be solved because you will be good enough for IDX, you will be good enough for Hong Kong Exchange. So I think that's one. One of the key things that you kind of mentioned as well, I think it's honestly, is all Indonesian companies suitable to go to Hong Kong? I think you need to make an assessment. Obviously, it's a multiple point, right? One obviously is the size and your growth profile. Whether do you think that you need the additional liquidity? Whether do you think that you want to kind of broaden out from a resources perspective to be able to kind of handle both the requirements and the vigor of both the IDX as well as Hong Kong EX. But we also kind of view that as a growth process as well. As companies grow in IDX and they grow bigger, better, and stronger, those companies would likely be able to be more global and will be more globalized in their company from both a corporate governance perspective as well as their growth opportunity as an operational standpoint as well. So even on that standpoint, that's how Hong Kong Exchange has also changed our regulations to be more all-encompassing. So not just your mature companies get to go to list in Hong Kong. We've also made changes to allow startup companies without revenue, companies that may not even have a commercialized product to sell, that's why you don't have revenue, to be able to list in Hong Kong. So we have specialized regulations called Chapter 18A and Chapter 18C, which allows biotech companies that may still be burning cash from research to be able to use Hong Kong as a listed platform to continue your journey as a startup company. Because when you are starting out and developing, you are still burning cash. And we understand that, right? In Asia, really, honestly, there's not a deep enough private market to sustain the entire startup phase. And so we developed regulations to allow startup companies globally to come to Hong Kong to list, biotech and deep tech. And especially this year where you kind of see AI as a very big theme as well, including biotech, we believe we are now entering a new phase where companies, especially looking to tap and continue to grow technologically, looking to tap into AI, and companies who are specifically growing their AI technologies can use Hong Kong as a market to raise capital and to grow. You know, in the last 10, 15, 20 years, we've seen the mobile internet company phase grow. We believe that the next phase is now starting, and we are growing towards the next 10 to 20 years. And that for Asia is probably the key catalyst going forward as well as part of the exchange catalyst going forward as well. And so we believe that there is a lot of opportunities for all of Asia, and we continue to want to make more enhancements. And that's why I think HKEX and IDX, we signed an MOU previously as well, because we believe that as we grow and we see sectors develop, the exchanges as well will also grow and will also enhance our regulations so that we can allow more companies that need to kind of grow and develop, and that we can be a partner to that as well.
Maybe I can add on a bit on the technical point on top of what Kevin mentioned on the commercial side. I feel a lot of companies, overseas companies looking to list in Hong Kong, first of all, they have to be on the acceptable jurisdiction under the Hong Kong Stock Exchange. And also when when the listing division of the listing committee approved it, jurisdiction to be on the acceptable jurisdiction, we're looking to your local laws and regulations, your articles of associations, the requirements from corporate governance. So there are little twists that we have to fix or amend or strengthen when overseas companies look for a secondary listing or prime listing in Hong Kong. Usually it's focusing on corporate governance. Say, for example, if you list in Hong Kong, you have to have 3 independent non-executive directors, and you must have an ESG, you must have a strong ESG, and then you would need to have a female director on the board. So maybe some countries can have this kind of requirements, but when you come to Hong Kong, you have to fit into that criteria. Then these are just some little adjustments. I would say adjustment, not a lot of things to do for companies seeking for listing in Hong Kong from overseas.
Dixon, the CLSA has worked on ASEAN listings in Hong Kong. So looking at Indonesia, which sectors or client segments do you see as best positions to benefit Hong Kong's capital market?
That's a very good one. I would love to make use of what Kevin just mentioned earlier. Not all companies are suitable for listing in Hong Kong Exchange. You have to look into your size, your path, your growth, whether you're on hot sector or cold sector, things like that. But I think in general, for Hong Kong investors, we always love to see something in layman terms or in my terms, that's something tangible. Tangible is something that you can get to know it from a day-to-day life. Consumer products, healthcare, technology, energy, natural resources. These are things that you can relate to from the day-to-day life. We would do that consumer deal earlier this year. It's a consumer product, so everybody knows what it is. They may even have drank that before or something like that. So these are the hot sectors or easy sectors for the investors to understand how good you are, what kind of margins you should get compared to your peers, what kind of growth prospect you can get outside of the original country in Thailand. Maybe they can further expand to China, Indonesia, US, UK, Frankfurt, I don't know. They can go global, right? So these are things that investors would definitely look at when they look at the opportunities, because at the end of the day, investors look into your future prospect, not how well you did last year, how well you did back in 2023. It matters, but the most important thing is how you're going to do this year, next year, and the year after. These are key factors that the investors look at when they look at the investment stocks. But from a sector perspective, I think consumer is definitely the easiest thing, the low-hanging fruit for all of us, because we would know about it. If you talk about F&B, if you talk about entertainment, these are things that you can relate to from a day-to-day life. But from an Indonesian standpoint, I think tech is a key thing locally, because I read a lot of things about how well developed it in terms of high-tech, digital wallets, digital assets are developing in Southeast Asia countries, especially Indonesia as well. So these are the hot sectors that I think we can further bring energy to Hong Kong, which we're a bit behind because we just started stablecoin a couple months ago, right? So I think a lot of countries started it even before Hong Kong. And now from the tech, healthcare, consumer, energy is a key thing. I was having a separate meeting with Kevin earlier this morning. We're talking about nickel, right? Because Indonesia is the second largest nickel producer in the world. This is a big cash we should bring to the market. I mean, I didn't even know about this until this morning, right? So a lot of investors are not even aware of this. We're the biggest supplier to the EV market. These are key. This will be a very key thing for the investors to see how good we can be and how good we can be. So I think we would definitely love to see more, in my layman terms again, more tangible products coming out from the Asia Pacific countries.
So Dixon, you've pointed the several sectors, consumer-related, energies, natural resource, as having a strong potential for Hong Kong. So, Calvin, from the HKEX perspective, are you seeing similar interest from investors, or do you see any appetite differently?
No, that's a wonderful question. I think one of the key things I kind of highlight is Hong Kong has more than 2,650 companies listed. And as you can imagine, because of that, it's a very broad range, a very diverse range of companies across consumer, financial services, internet, technology, healthcare, discretionary staples, and all the full spectrum. So I think there's always a place for everyone, right? And at a different stage. And to my earlier point just now, where you really need, not all companies get to go to Hong Kong to this. What I mean to say is, not every company at any single point in time goes at the same time. But at different points in time, I think things can change as well. And so it really depends on the time for both your company at your growth stage and also for where the markets are. I think there's always a time for everything. So as what Dixon has mentioned just now as well, energy transition is a huge theme right now. And Indonesia plays a huge part in the global supply chain from an energy transition perspective. So this begs a question of which are the companies that are able to participate in this wave right now. Consumer continues to be a huge trend, right? As Dixon mentioned before, the touchy-feely things, people understand it, and we're all in Asia, so we understand how consumer products kind of go and continue to kind of climb to be 50-year companies, 100-year companies, and so on and so forth. So that theme continues to kind of play. And earlier I mentioned technology. We're going into the next wave of technology, whether it be data centers, whether the providers, energy providers to the data centers, that plays along the AI thematic as well. Those become very, very key. And again, one of the key trends that is global is aging population. Healthcare is going to be a big thing. And amongst healthcare, beyond the services, the pharmaceuticals, the drugs, the medical devices, biotech cannot be missed out, because that's going to be the actual breakthrough for to handle the aging population going forward, and the issues that comes along with it. So I think from a sector perspective, I always kind of say horses for courses. Different investors will actually find different interests in different parts. The key is you need to find the biggest pool of liquidity, the biggest group of investor base that will be willing and able to understand your story and to partner up with you in the long term. So Hong Kong right now, we have 250 companies queuing up for listing. 45% is in technology broadly, AI, robotics, automation. About 20% is in healthcare. And then you have big thematics like consumer and new energy coming through as well. So it's still very broad, but from a directional standpoint, we do believe, similar to how Indonesia is growing, the sectors that are forthcoming really are the key areas that Indonesia is growing as well, which is in technology, which is in energy transition, consumers being a key theme as well. So with that, I think there's a lot more similarities, and I find that similarities come through because we're all in Asia. We all live in emerging markets. And the investors that come to Asia and invest in Hong Kong understand emerging markets. They understand Indonesia, and they don't feel like it's a risk premium. Albeit, when they list in Hong Kong and you use the Hong Kong dollar, US dollar equivalent, that takes away the Forex element of things. So I think that, again, it's a very broad spectrum. It's very all welcoming. Timing is important. But with regards to timing, like I mentioned just now, if you want to go far, you go together as a community. So we always encourage to have dialogue broadly with all our intermediary partners as well as with the exchanges as well.
Pak Fahmi, so how the initiative is IBX currently putting more weight or prioritizing to help Indonesian companies enhance liquidity and capital market access domestically?
Sure. This year, we currently on progress of we make some adjustment in our listing requirement. Basically, the point of what we are doing is we increasing the requirement for to become a listed company in terms of size, in terms of free float, in terms of operational historical. So the idea is we see that the current past 5 years, a lot of IPO in Indonesia, a lot of IPO in terms of number in Indonesia, but we're still waiting for the biggest one. I mean, if we compare to our capital market to the region, so to the globally, the proportion of medium and small size company to the bigger company, it's quite not balanced. So we will do an adjustment in our requirement to ensure that Indonesia will have attractive for the bigger company to be listed to do an IPO in Indonesia capital markets. That's number one what we are doing right now. And after that, of course, we have 3 strategic issues that we are doing right now. The first is about investor protection that already I mentioned earlier. And secondly, about market deepening. So we are improving our product also. A lot of new product like you already know, like a structured warrant, for example. That's one of the product that we see the growth is very exponential. And the third strategy is about market connectivity. And market connectivity, it's also about exploring the potential of connectivity between the other region, with the Hong Kong, with the Singapore, with the Malaysia, Thailand. I can say that we now closely do a coordination to see the potential of what we can, what kind of connectivity that we can create in the short and in the long terms. For example, we are also like exploring an ETF for the with the Thailand Stock Exchange. Say that the potential also depository receipt with the Hong Kong Stock Exchange also, and a lot of things that we just look for it. So basically, we try to identify the what's make the potential of like what the stopper for the listed company to get an access globally for the other market, and we just try to identify and solve the problem one by one. But of course, we as exchange also we need like we have a higher regulation, so in Indonesia, and also we have to comply with the direction from the government also. This interaction still happen. At least we show to them that this is needed, very needed for our capital markets. So we do an intense discussion with other higher regulation to make it smoother in the future.
So, how you explain about the IDX initiative to strengthen the domestic companies? So, Dixon and Calvin. So, from the investors' perspective, do those efforts make Indonesia's company more compelling, or still there a gap?
I think people are looking into companies outside of China differently nowadays. Because back 2 years ago, the market was pretty slow. Now the market is coming back strong. So there are a lot of compelling reasons for us to look beyond just Hong Kong and China. And then we do see a lot of energy in the emerging market in different sectors. I like what Kevin just mentioned. It's different time for different companies, different sectors, right? Because back 10 years ago, real estate, property management, then biotech, tech, and even look 15, 20 years ago, maybe the banks and state-owned banks. So the sectors keep changing. So there are a lot of reasons for us to look beyond just China and Hong Kong. We look at the emerging markets, the fast-growing markets. So I was traveling in Southeast Asia for the past 2 months. I do see a lot more energy in Southeast Asian countries than what we see in Hong Kong and China. I must admit that. There are a lot of potentials in the market. That's why I think investors do want to see some new appetite or new energy in the market. That's why I think there are a lot of compelling reasons for the investors to start looking beyond Hong Kong, China. There is always a thought that if there's no China angle, should you come for a listing in Hong Kong? I don't think that is the story anymore. We look at your fundamentals. This is a key thing. Just think about one simple example. Back 20 years ago, a lot of Chinese companies going to listing in the US. Do they have a US angle? None, right? So that's how I see the Southeast Asia market.
No, I fully agree with what Dixon mentioned as well in terms of development. I think recently in July, I was fortunate enough to be in Tianjin to go to Summer Davos. And I was speaking to a global European fund. And one of the points that was raised is, did you know, based on the World Bank, that more than 50% of the GDP growth globally is coming up from Asia? And then my question to that European fund is, how is your portfolio allocation reflecting that GDP growth in your investments? Right? And I think going forward, as we have seen in the trend, not just the Asia growth being 50%, but the reason why I say in GDP growth is because more and more we see Asian companies becoming more and more global and being part of the entire global landscape. And so going forward, and I don't think this is going to come down because of what Dixon mentioned, the energy as well as the cost advantages, as well as the cultural advantages as well, that it can only be stable and more from a GDP growth composition perspective. And so I think from that standpoint, investors globally will continue to look at investment opportunities in Asia to better reflect the GDP growth from a global standpoint. I think investors will increasingly look at Asia to get more and more returns obviously from a return of capital perspective. But more importantly, I think from that standpoint, then it really kind of brings about the question of how can the Asian community stand together, receive this global investor interest that's probably going to be coming and already is coming, and provide the amount of products. And when I mean by products is, where are the global Indonesian companies? Where are the Indonesian dominant player companies that are looking to list and I can invest in them anywhere, whether it be in Indonesia or whether it be in Hong Kong? I think this is where the journey for us and the challenge for us is going to be going forward. As we continue to see all these sector thematics play out, Asia will definitely be a key focus for all investors globally.
Thank you, Kelvin. So before we conclude, I'll take two questions. We have received 3 questions. I'll take the question from the Andre from MNC. Should the company have its own operational business or revenue, or could it act merely as a holding company and depends the revenue to its subsidiaries? It goes to you, Kelvin. Should the company have its own operational business or revenue, or could it act merely as a holding company and depends the revenue to its subsidiaries? I guess it's asking about the ideas, right?
Yeah, I mean, we've seen a lot of different kind of listings. You have holding company listings, and then you have specific subsidiary listing companies as well. I think most importantly, at least from a Hong Kong exchange requirement perspective, is it can't be a shell company that you're listing, right? It has to be an operational. There needs to be a business behind that company. But going forward, I think we've kind of seen a lot of the companies as they kind of grow. Obviously, when you're dominant in one sector, you start to kind of branch out, having different products, having different sector exposure as well. I think again that becomes a time where you can start either separating out and listing so that your subsidiary is able to kind of grow and get a separate valuation to be able to kind of enhance the overall investor appetite for companies. Or you can continue to kind of grow if you see that there are synergies and advantages. For example, as a conglomerate, you can probably get a better bank rate in terms of borrowing. And you can use the whole conglomerate as a way to, from an asset balance perspective, to actually get a better credit rating and a better credit debt for all subsidiaries. But similarly, I think if you are a subsidiary, you will be better able to address a particular growth area. Say, for example, I'm a big property company and all of a sudden I have an EV subsidiary. Now, if the EV subsidiary can grow very quickly on its own and be able to list, it probably will get a better valuation as a standalone. So again, I think it really, again, back to the point of where are you in that journey? And when does it make sense? It's always coming down to the fundamentals of the company, first and foremost. The capital markets comes in together to journey with you in the long term. So boiling down, but again, it doesn't mean that you have to walk alone the journey. I think that's where help and intermediaries and advisors come in together, and having that community around you becomes very, very important.
Last question Armand, so I have to raise these questions. All right. Some questions. So, what are the costs and the commitments after dual listings? And for instance, additional regulations from different authorities?
That's fine.
Yes.
The listing, the cost for listing. I think the most important thing to think about is not the dollar amount for a listing. It's how much time the management would have to put in, or in other words, sacrifice. We've seen a lot of companies preparing for a listing where the CEO spent a lot of time with us doing the drafting, attending meetings for probably 3 to 6 months. We really don't want to see the CEO spend a lot of time with us preparing for the IPO. Usually, if he does, the business performance sort of go down, right? So this is the biggest cost we have to bear in mind from a corporate perspective. When you look for a listing, whether it's a primary listing, a secondary listing, or you list in 3 or 4 places in the world, get a team of professionals to help you. Get your own in-house team, to a separate team to run the show. The big boss, the CEO, should be running the business. Let us do the work. So this is the one key message, that it's hard to put a dollar sign on your cost to the listing. But in terms of hiring professional parties, I think for a Hong Kong listing, it ranges from 2 million Hong Kong dollars to 5 or 6 million Hong Kong dollars. 2 million US dollars to something like 6, 7 million US dollars. It depends on the size of your operation, the size of the offering, the professional parties you hire, and the time you require for the whole IPO process. But I think those are very little compared to the time of the team of the professional parties within your firm. This is the key cost you think about. It's a journey that would take 4 to 6 months. So you have to have the team that put up the time to do it. CEOs, go run the show. Let us do the work.
No, thanks, Dixon, for that. I think that there are definitely, as what Park has mentioned just now, there are costs to it, right? Whether it be financial costs, whether it be time, which is even much bigger cost, right? Or ongoing, which is, you have 2 exchanges. Obviously, you're going to have 2 sets of announcements, 2 sets of everything, right? Is that very troublesome? And I think it as like a company, as you're growing and getting bigger, it's also like a person growing, getting bigger. Going to the gym and getting healthy is actually a very big sacrifice, right? You gotta wake up, you gotta spend and have the discipline, you gotta spend time in the gym, and you gotta do it every day. And sometimes you go every day, you're looking, I don't see a difference. But it's slow, but it's definite. It's slow, but it's definite. And it's what Dixon said, it's a journey, right? So as getting healthy is a journey, growing big is also a journey. And growing big in 2 exchanges is even a bigger journey, right? But as Dixon mentioned, you don't have to take it on yourself, right? There's a community around you. Have the advisors around you. Just like when you are going to the gym, sometimes if you need it, you get a personal trainer, right? Have the exchanges come alongside with you. Just like sometimes you need a nutritionist, right? And guide you as well. Right? So there are many different ways that can make the journey much smoother. The key is not to walk it alone on your own, right? And I think the exchanges are here to help. And the way that we help is we continually get feedback from you guys, from the listed companies, from the market, so that we can make better changes. We continually have dialogue with one another so that we can kind of break down the walls, so that we can further collaborate to make it a better environment for all listed companies to grow further as well. One of the key things I can mention is, Hong Kong Exchange have kind of broken down that time element, right? So if you're a fresh listed company, when you put in the application, we take no more than 40 business days to finish that approval process. If you're an already listed company, we'll take no more than 30 business days. So we're probably one of the exchanges with a time gap limit. But this is not a race. This is really to facilitate the timing for companies so that you don't waste time. And we are making sure, using all sorts of tools that we have, including AI, to make sure that we can vet and make sure that we are part of that journey as most efficiently that we can to create a better capital markets. So I think this is a journey. We continue to learn together, and we'll make mistakes, but we'll seek to kind of like make it better for everyone.
All right, thank you. Armand, yeah, please.
Okay, just quick one. I think the most important thing when we are doing this journey is by starting moving now. Because if we not start, we not explore now, yeah, we will miss the timing. And secondly, the key that I think it's like a tips that can be used for all of Indonesia listed companies, just go beyond the regulation. I mean, we have a minimum requirement. For example, for the disclosure area, how you create your annual report, how you create your sustainability report. We have the requirement, but this is just the minimum requirement. At least you have to try beyond of that. You look for the more global standard, for example. It's like a training for your company how to track more globally. I think just quick tips from me.
Thank you, Pak Hamid. So thank you, Dixon, Kelvin, and Pak Hamid for your valuable insights. So there's one message today is so strengthen your fundamentals at home, leverage Hong Kong's global platforms, and approach dual listings with a clear strategy. So I will have to end this first panel discussions. There's still a few questions that have been raised. So have you any questions? So you may approach the panelists during the networking sessions. Thank you. Thank you.
Thank you to our moderator and panelists for that engaging and insightful session. Okay, our second panel will focus on readiness and resilience, preparing a listing and beyond, which will be moderated by InvestHK, Senior Vice President, Head of ASEAN Issuer Services, HKEX.
Thank you. Thank you very much. I think we've got a couple of panelists online, so can we just check that everyone is on? And I'd also like to invite all our panelists up on stage. So Alex, Pakoki, Ihsan, Cesario, please. And just leading, I mean, Armand, you mentioned earlier about connectivity. So this is our attempt at connectivity. We have, I'd like to thank King for joining us from Taiwan and Christina from Hong Kong as well. So this is really a regional effort. You know, as mentioned, the prior panel hopefully was you know, a lot of very interesting insights shared on the commercial attractions of listing in Hong Kong. And also on the Indonesian landscape. So in this panel, we're going to be exploring and diving deeper into how and what's next. You know, and just leaning on what Fahmi was mentioning as well about, you know, taking action. So on the next in the next sort of 45 minutes or so, we'll discuss some of the key considerations involved in preparing, you know, for this journey. As was also mentioned in the past panel. So just to kick things off, tapping overseas markets for Indonesian companies, you know, has been quite rare historically, right? So it's not something which happens a lot. But as Indonesian companies scale and begin exploring international growth and capital raising options, you know, Hong Kong is a natural market to consider for the reasons as was mentioned previously. And today's panel brings us, you know, we have for you an extremely experienced group of panelists who are very well placed to advise how to go about this. So maybe to kick things off, I'll let each of the panelists just quickly introduce themselves. Perhaps we can start on the line first and then round up here in the room. Christina, maybe with you, just a short introduction, perhaps.
Thank you very much for having me today. Hi, everyone. Good morning. I'm Christina Lee, a partner of Baker McKenzie Hong Kong. I've been with the firm for over 20 years, almost get to 25 years now. I now had the Asia Pacific Capital Markets team from Hong Kong. I'm very glad to be here together with my colleagues Alex and Anthony and others to present today. I'm also a member of the SFC Takeovers panel. Very glad to be joined in this discussion.
Okay.
Hey, thank you, Abby. So, hello everyone. This is King Ho from JP Morgan. So I look after JP Morgan's DR business for Asia Pacific. So yeah, we can probably go into a bit more detail later, but basically we are working on connecting markets, which I believe is a key theme of today's seminar. We help companies around the world to list their shares on another stock exchange, mainly in the US and also like Singapore, London, and of course, lately we also help several companies to list their shares on Hong Kong Stock Exchange. So hopefully, we can share more on our experience later.
Thank you. Okay. Just a quick introduction.
Yeah, thank you, Abhishek, and thanks for having me as well. So, good morning, Bapak Ibu semuanya. So, my name is Oki Stefanus. I'm a partner in EY Indonesia from the Strategy and Transactions Department. So, I'm involved in the financial due diligence and also mainly on the mergers and acquisitions of companies. Yeah, thank you. Alex.
Hi, everyone. My name is Alex, and I'm a partner at Baker based in Singapore. So I've been practicing now for close to 25 years in capital markets, and much of that has been in Southeast Asia. What I do is I handle the international aspects of IPOs. So I would work alongside colleagues from Jakarta or Hong Kong, and together we ensure that a company ticks all the boxes and is ready to for both the domestic aspects and the international aspects of an IPO, and I'm sure we'll talk about those.
Hi everyone, my name is Iksan. I'm with EY Tax Indonesia and have been with EY for 15 years. I'm focusing on the transaction tax, merger and acquisition, as well as the international tax for tax structuring. So for the pre-IPO company, typically some restructuring is needed, and we support the company to help on that, as well as the some part of the restructuring for the listed company to have another subsidiaries to also perform some tax neutral merger or spin-off to get some tax facility for efficiency.
Thank you. Morning everyone. My name is Cesario, and I'm an associate from HHP Law Firm. So currently I'm focusing on capital market transactions, doing similarly like pre-IPO restructuring and IPOs. Rights issue. We have also had some experience assisting in a public company on its attempt to establish or issue the sponsored DR. So yeah, thank you. Glad to meet you all.
Thanks, Cesario. And last but not the least, Anthony, maybe a quick introduction from you as well.
Hi, my name is Anthony. I'm a special counsel with Baker McKenzie Hong Kong. I have been working on the Hong Kong capital markets, like fundraising, IPOs, for more than 18 years. The companies that I represent covers a range of industries, for example, TMT, financial institution, education, healthcare. So I'm glad to be involved in today's discussion. Thank you.
Thank you very much. So let's just dive into the meat of discussions. But before that, a statistic. So Hong Kong ended the first half of this year ranked as the #1 IPO venue in the world. And I think as the previous panelists discussed, we can be a very complementary venue to Indonesian corporates that are increasingly evaluating dual listing or secondary listing options. So as part of that, obviously understanding the regulatory landscape is key. The first question, Christina, could you share with us what are the key Hong Kong listing requirements that Indonesian issuers should be aware of, and any sort of key points on how to navigate them?
Sure, thank you. Yeah, as Dixon and Calvin earlier said, what's good for IDX would be good for Hong Kong Stock Exchange for sure, but there are some nitty-gritty details often that we need to pay attention to, and happy to be sharing some of the high-level listing requirements that Indonesian issuers should be made aware of if they do wish to come and list on the Hong Kong Stock Exchange. First and foremost, Hong Kong Stock Exchange does require a 3-year track record period, full financial year trading record, management continuity of 3 financial years. So during that 3 financial year, we expect the majority of the management stays the same. We also expect a full financial year before listing of ownership continuity. So the controlling shareholder of the Indonesian listed company should remain the same as well. So in addition to these operating and management requirements, there are also financial eligibility tests. The traditional one, in addition to the specific ones which Calvin earlier mentioned for healthcare and TMT companies, 18A, 18C companies, the traditional financial eligibility tests that most of the listed issuer would deploy as follows. First and foremost, that is commonly used is the profits test. For the 3-year financial track record period, we expect in the latest financial year, the company would achieve a profit of no less than 35 million Hong Kong dollars. In the earlier 2 years in aggregate, no less than 45 million Hong Kong dollars. If we are unable to meet the profits test, there are other tests to meet, which we could also use to meet the eligibility test. The other one is the market capitalization, revenue and cash flow test. In respect of this one, the market capitalization upon listing is expected to be no less than 2 billion Hong Kong dollars and of a revenue of over 500 million Hong Kong dollars and a cash flow of over 100 million in aggregate for the 3 preceding financial year. So that is the market cap, revenue, and cash flow test. The last one we could use is expecting a much higher market cap test, but without the cash flow requirement. The market capitalization requirement is over 4 billion Hong Kong dollars, and the revenue test for the most recent audited financial year, it's over 500 million Hong Kong dollars. So these are the 3 main tests which a listed issuer proposed to come to Hong Kong could use to satisfy the traditional listing requirements. And just to add, before we head to the next question is, Hong Kong, the accounting standards adopted for Hong Kong listed company is the Hong Kong Financial Reporting Standards or the International Financial Reporting Standards. So those are 2 sets of accounting standards which is accepted by the Hong Kong Stock Exchange for coming up with the financial eligibility requirements.
Thanks, Christina. And just on the point of accounting standards and financials, perhaps Pak Oki, clearly it's a key work stream. What would you say are the most critical steps, for a company that the companies often underestimate, and how can IDX listed companies prepare for Hong Kong from a financial reporting perspective?
Yeah. Okay. Thank you, Abhishek.
So I think with regards to this, I would say there are 5 points that needs to be considered. Yeah, the first point would be the financial reporting standard. The second one would be the internal controls. The third one would be the disclosures and also the governance. The fourth one would be the financial modeling projections, and also the fifth one would be the collaborations with the other business units. Yeah, maybe if I can touch from the first point on the financial reporting standards, I think because in Indonesia we are using the Indonesian accounting standards. Was as mentioned by Christina, in Hong Kong, they can accept the IFRS as well as the Hong Kong financial reporting standards. Yeah, so of course there would be some alignments, reconciliations, and also some adjustments in order to report using that standard. Yeah, so that's number one. And then the second point on the internal control. So of course there would be some enhancements and also control procedures that needs to be implemented because yeah, from a private corporate companies to become a listed, there would be some enhancements on how things needs to be controlled and monitored. And then the third one would be on the financial projections and the modeling, because to some extent there would be prospectus excluded, and this needs to be solidified and also put into the numbers. Hence, this will also result in the which will relate to the valuations and also the overall projections itself. Yeah. And then the fourth one is on the data governance and also the disclosures, because of the new report, the reporting standards also requires additional disclosures as well. And then more governance needs to be in place. Yeah, and then the last one on the collaborations with the business units. I mean, it's not only from the financial tax perspective, but it would also involve the operations, legal, and also from the strategic point of view. Those are the 4 points.
Thank you. And obviously, in addition to financials, I think from an Indonesian listed company perspective, Indonesian business perspective, tax implications of a listing are equally critical. So maybe Pak Ihsan, if you can share on tax and structuring, clearly key corporate and shareholder considerations. Any advice to everyone in the room here on how to better prepare for accessing the Hong Kong capital markets from a taxation perspective?
Yeah, thank you, Abi. Yeah, yeah. Basically, from tax perspective, we can see from the corporate and shareholders' perspective or investor perspective. So, being a listed company in Indonesia, it already has the preferred tax regime. Like, for example, the sale of shares is subject to a preferential rate of 0.1% instead of normal capital gain tax. So if this Indonesian company that already listed in Indonesia going to have a dual listing in Hong Kong stock exchange, then basically that kind of benefits for the investor still can be accessed. From Hong Kong perspective, Hong Kong is already considered as having a good tax regime. There is no dividend tax, no capital gain tax, and being the investors, I think there are 2 considerations in terms of dividend distribution as well as the future exit. So the Indonesian company or the issuer, when they are distributing dividends to the investors, in Indonesia we do have the withholding tax. And for the local corporate entity, I think dividend withholding tax is already very good, which can be exempted. Or if it is Indonesian individuals, it can still be exempted, so long that it is reinvested. And for the non-resident investors, especially in Hong Kong, we do have tax treaty with Hong Kong, so it provides a lower dividend withholding tax. So for the Indonesian company distributing dividend to the non-resident, under our local regulation, it will be subject to 20% withholding tax. But if the income recipient is a tax residency of Hong Kong, it can be lowered to 5%. So it is also beneficial for the Hong Kong investors to having investment in Indonesia, and they can also access that lower dividend withholding tax. So, secondly, from the structure perspective, I think for the companies that exploring these options, it's not only the Indonesian listed company that having an option to register in Hong Kong, but also there is another option. So, for example, the subsidiary of this Indonesian company, they would like to list it in Hong Kong Stock Exchange. So that is also this option. However, exploring these options still need to be exercised further because there will be pros and cons. For example, if the non-listed Indonesian subsidiary they immediately listed in Hong Kong, probably the shareholder cannot access the preferential tax regime of 0.1% because it's still considered as non-listed Indonesian entity, although it is listed in Hong Kong. So there are options, and companies still need to consider what are the pros and cons for the considered structure. But again, there are always opportunity to explore what are the most tax efficient structure. I think, yeah, that's
very, very helpful, very helpful. So clearly benefits, to be listed in Indonesia and then exploring a second listing for Indonesian companies. I think just coming closer to home for us here in Jakarta, Cesario, perhaps you could take the next question. What sort of domestic approvals will an IDX listed company need from the Indonesian regulators in order to access overseas capital markets?
Yeah, thank you, Abi. So currently under the Indonesian regulations, actually there is no governmental approvals required, but there are some assessment that need to be made. For example, it will be depending on the sectoral or industrial regulations whether or not the access to the foreign market is required. The issuance of new shares is required to obtain approval for under the sectoral regulations. But generally, for if the source of shares for accessing the overseas market is through by issuing new shares, basically there are two options that can be done. One being is the rights issue, which requires the registration statement process, requiring for the company to obtain the effective statement from OJK. So there will be a process in OJK. The GMS approval is also required, and the IDX listing approval is also required. Other than that is for if the source of shares is through the private placement, or we call it NPR, but there is a cap of 10%, and there is a pricing consideration that need to be fulfilled. And also the requirement is to obtain the IDX listing approval for the listing of the private placement new shares. Yeah.
So but there's no OJK process in the private placement. There's no requirement for a prospectus for OJK review. Right?
Yeah.
That's helpful. And how about vendor shares or secondary shares? If there were to be secondary shares, is there any sort of similar approvals, or is that approval free?
Relatively for the secondary shares, it's relatively more easier. So maybe there are some notification obligations to be notified to OJK and IDX for the purpose of the transfer or using the vendor shares.
Thank you. Just on structure as well. What kind of structure for IDX listed companies can to access the overseas markets? Can they list shares on overseas markets, or will the access only be through depository receipts?
Okay, the answer is under the current Indonesian rules, the OJK rule provides that all of the shares issued by the IDX Listco must be 100% listed on the IDX. So there is no way for the IDX listco to list directly shares at the offshore exchanges. So the only way to tap into the market is if you want to do dual listing is through by issuing the DR, signing a certain agreement with the depository, where the depository will issue new share depository receipt, and the depository will be the registered shareholder under Indonesia. Yeah.
Very helpful. So I think it's probably a good time to bring King into the conversation from Taiwan. So King, maybe you could explain for everyone in the room here, how does a depository receipt work, and what would your role be as a depository bank in this whole process?
Yeah, thank you again, Abby. So maybe just a little bit of DR 101. So the DR product basically was created to address mainly operational and technical issue on cross listing. It's not a new product. JP Morgan created it nearly 100 years ago to help a UK company to cross list into the US. And of course, over the years, the product evolved, and currently there are more than 3,000 DR programs, live DR programs in the market. Like most of them are on the US exchanges. We usually call them ADR, and then we also have GDR can be listed on London, Singapore, and Luxembourg stock exchanges, and of course we have HDR, which is can be listed on Hong Kong stock exchanges. So basically, how they work is because as a listed company, when you do a dual listing, you are going into your home market very well. But when you go into a foreign market, then it's a brand new challenge for the listed company, right? So they have to worry about the listing rules, accounting rules, and investor relations, and marketing, etc. So our role is basically to take care of the operational part of the things. Like, for example, like I mentioned earlier, how do we keep the ordinary shares? How do we process dividend payment, AGMs, and conversion between markets? So we take care of all of those, and then the company can focus on their main business and focus on the cross-listing and fundraising capability. So what we do is, particularly in the case for Indonesia, the good news is there's already a DR framework under the Indonesian security regulation, meaning although many people already forgot that the Indonesian company, they did issue DR before, but it's ADR in the US. But the regulatory framework is there, the operational framework is there. So basically, JP Morgan as the DR bank, we have a local custodian in Indonesia. So when a listed company, they want to issue a DR onto Hong Kong Stock Exchange, once they get through all the listing application, etc., then what we do is we safekeep the ordinary shares in Indonesia. That means that the ordinary share never leave the market. That will allow the company to comply with the IDX requirement of 100% ordinary share listed on IDX, right? So no ordinary share is listed on another stock exchange. And by holding this underlying security, we will be issuing Hong Kong depository receipt according to a specific ratio. It could be 1-to-1, or it could be any other ratio, depends on the company's preference. And then we will issue the HDR, which will be listed and traded on the Hong Kong Stock Exchange. And we also so our role is mainly two-part. One is we are responsible for all the corporate actions, like AGM, dividend. We pass through all this corporate action to the Hong Kong investors. And on the other hand, we also maintain what we call a conversion mechanism, or some people call it fungibility, meaning the DR on traded on the Hong Kong Stock Exchange is interchangeable, convertible with the ordinary share traded on IDX, which is a very important feature of DR, because this ensures the liquidity in both markets is convertible, meaning when the company's DR is listed in Hong Kong, usually the secondary market is not as liquid as the home market. So if there's a need for liquidity, the investor can anytime tap into IDX liquidity, buy ordinary share on IDX, and then convert them into DR and then deliver to Hong Kong. Or the other way around, you can convert the DR into ordinary share and then sell on IDX. So that mechanism is very efficient. We can do pretty much same day or next day delivery. That will maintain what we call a market price equilibrium between the two markets, as you can see on most of the market that we offer, like Hong Kong, between Hong Kong and Japan, Hong Kong and the US, and Hong Kong and Brazil. We have done helping companies from this market to list their DR on Hong Kong Stock Exchange.
Great. So, well, it sounds like it's a tried and trodden path. But again, from the standpoint of the issuers here, King, what would you say are the key considerations for issuers here to prepare to offer a DR? Like, what would be the key preparatory steps and next steps, effectively, if they wanted to go ahead with this?
I think, as I mentioned, the good news, it's a tried and proven method. Although there has yet a company, Indonesian company, to list HDR on Hong Kong Stock Exchange, but there are Indonesian company already issue and list DR on other stock exchanges. And from an operational perspective, it's pretty much the same. So all the infrastructure is there. The legal documentation, the key legal documentation is the deposit agreement, which we already have a template, right? So the operational setup is done. I think that allow the company to focus more on different options on Hong Kong Stock Exchange, right? Meaning you can go for a primary listing, you can go for secondary listing, depends on your objective. And then you can also go for the listing with offering or listing by introduction, right? So that all depends on the company's objective. Say, for example, if you are looking to tap into the liquidity in Hong Kong, and also, of course, we all know that Stock Connect is becoming more and more important from a liquidity perspective, then you may want to target a primary listing with an offering on Hong Kong Stock Exchange, right? That would have kick off the liquidity on Hong Kong Stock Exchange and also allow the company to tap into the Stock Connect liquidity as well. So I think that the good news for the issuer is that you don't need to worry about how to get onto Hong Kong Stock Exchange, because we already have that already available. So you can focus more on the Hong Kong listing rules, the accounting standard, and also like your equity story, right? Which is very important, how to attract the Hong Kong investors.
Perfect. Christina, Indonesia, as was mentioned earlier by Pak Fangmi as well, is now a recognized stock exchange for secondary listings. What would be the typical process for a secondary listing? And could you shed a little bit of light on what the process would look like, and any common waivers that may be available for IDX listed companies pursuing a secondary listing?
Sure. Essentially, a secondary listings process is it's very similar to an IPO process. The requirements that I mentioned earlier would still be applicable, but as you rightly pointed out, there are some modifications to the rules, as well as some waivers that we could obtain from the stock exchange, as we actually respect the fact that the company is already primarily listed in another stock exchange, is well governed under that particular regime. So in addition to the requirements that I mentioned earlier, for an Indonesian company who wishes to secondary list on the Hong Kong Stock Exchange, one major modification that we wish to highlight is the market capitalization requirement upon listing. In a usual scenario, Hong Kong for Hong Kong companies, primary listing, the market cap requirement is $500 million. But for a secondary listing, Indonesian company, the expected market capitalization at the point of secondary listing, assuming it has a clean, good regulatory compliance record for the last 5 full financial year, it's 3 billion Hong Kong dollars. So if they don't satisfy the 5-year clean regulatory compliance record, if it only has 2 clean year record, then the market capitalization expected at the time of secondary listing is 10 billion Hong Kong dollars. So this is one of the more fundamental difference for secondary listing for Indonesian company in Hong Kong. As mentioned, there are waivers that it's made available for secondary listing, some of which are automatic, some of which have conditions attached. For the automatic ones, they include we'll waive the requirement to establish audit committee on the board, requirements with respect to Hong Kong qualified company secretary that is waived, and there are waivers for compliance with the corporate governance code and ESG reporting, and the share option scheme requirement and a Chapter 17 of the listing rules would also be not applicable, would be waived for compliance for secondary listing in Hong Kong. These are automatic waivers. There are other waivers that could be subject to some conditions. These waivers include basis for preparation of accountant's report that is probably quite essential, like especially for that would save a lot of work for listed companies given the differences in local standards and IFRS. There's also a waiver for monthly reporting on monthly return, disclosure of interest, essentially provided that some filing requirement is made in the local jurisdiction. And also the Hong Kong Takeovers Code would not apply to secondary listed company in Hong Kong. So that would actually save a lot of compliance work in case that target is being taken over by some other investors. So these are some of the waivers made available under the listing rules.
Thank you. So clearly, I think from a secondary listing perspective, it is a far less onerous path for Indonesian companies to access the Hong Kong markets. In the next segment, we'll talk a little bit about accessing international markets generally and some sustainability and ESG aspects as well. Now, home markets are often the natural choice for companies to list, but many businesses are now scaling boundaries. So they're no longer single country businesses, and accessing international markets is therefore becoming much more interesting from a capital markets perspective. And depository receipts obviously have become an increasingly practical tool to capture into this flow and capture capital market momentum. So perhaps, King, could you share some thoughts on cross-border capital flows, what you're seeing on this theme, and how Indonesian issuers could position themselves to capture this demand?
Yes. Yeah. So I think because we operate in more than 40 different markets, so we do see the investors' preference. So I think what's important is that unlike the more mature market, Hong Kong, Singapore, or Japan, for foreign investors, for a lot of the emerging market, it's still quite challenging for them to get direct access to. Right, you may face like on the currency control, there may be special reporting rules, repatriation limits, and then they may need to do special foreign ownership disclosures, foreign investor registrations, and then also they may also be subject to like FX fluctuations and settlement challenges, etc. So we do see like especially for companies from emerging markets, DR really helps them because what a DR actually do is to bring the local equity into a more advanced capital market in terms of the legal framework, the settlement infrastructure, the reporting guideline, etc. So, and it's more familiar for the international investor to operate in this market. So, for example, if Fidelity they want to invest into a new market, right? Usually, for the size of Fidelity, they will move in big. So they will create a special team or a special desk for that particular market and set up all the custody infrastructures and trading infrastructures, etc. But not every institutional investor have that kind of capability, right? So for medium size or smaller size or high net worth investors, they prefer to operate in a market which they are more familiar with, right? International financial center like Hong Kong. So if you can bring your local equity into a international financial center like Hong Kong, that will allow more investors to be able to access your equity, right? That's just one big advantage for using DR. Secondly, the DR product itself, it offers a lot of advantage to the issuer company as well, because as I mentioned earlier on, when you go on to another stock exchanges, then you have two set of everything, nearly double your effort, right? So for Indonesian company, you no longer need to like work on the local announcement, local dividend payment, local AGM, but you also need to think about like, okay, what do I need to do in Hong Kong in terms of dividend announcement, AGM, and the other operational stuff, right? So if you do it, when you do a DR, basically we take care of most of the operational responsibility in Hong Kong. We do the dividend announcement, we do the AGM announcement, we offer proxy voting, we offer tax reclaim service for the Hong Kong investor. So the company, you don't have to like worry about all this new obligation or responsibility, right? So that's why from a capital market flow perspective, we do see a lot of investors using DR to access, especially like emerging capital markets.
Thanks, King. So the role of the depository clearly critical in markets where the DR product is needed, such as in Indonesia. So thank you. That's very helpful. Alex, perhaps we'd like to bring you in at this point. Now, the primary driver to accessing Hong Kong for Indonesian companies will, of course, be accessing the full breadth and depth of liquidity that the Hong Kong market offers. What does this mean for a company from a preparation perspective? And can you highlight for the group here the key considerations involved in an international offering?
Sure. So the point's already been made throughout the discussions we've been having, but it's an important one to stress, and one I want to take one step further. The message: if you're good enough for IDX, you're good enough for Hong Kong. There's a third element to that, which is implicit in everything we're saying, but I just want to drive that point home. And if you're good enough for Hong Kong, you're good enough for the world. It's important to understand that the reason we keep speaking of this access to global liquidity is because, let's be realistic, the IPO and the dual listing is a journey. And of course, it's going to take a lot of preparation. It's going to take a lot of work in terms of putting together the disclosure, the financial statements that we've been talking about, the corporate governance. But then again, as has been mentioned, we as advisors are here to assist in that process to a great extent. But what lies at the end of this journey, when I say access to global investors, the disclosure that's produced, the prospectus, the contents of that document and the due diligence behind it is something that will meet the expectations of global investors. And when you talk about the international investor pool, it sometimes tends to break down into with US investors or without US investors, you might be familiar with the terms Reg S 144A. But at the end of the day, even though there is always a little bit of incremental work when you go into the US, given the nature of investor expectations and litigiousness in that market, the fact is that that increment is actually quite small when you've already done the work to get yourself ready for a Hong Kong listing. So that's really what we mean. When you go through this journey, and it is a journey, but at the end of that, when you put together the disclosure and when you've done the diligence behind it, then you really are ready to meet expectations from a global pool of investors. I think that's what I would focus.
Thank you. Just moving on to ESG and sustainability, because again, that's a topic which is very, very topical these days for investors and as a result, corporates as well. So perhaps for the Baker McKenzie team, maybe starting with Christina and Anthony in Hong Kong, clearly ESG critical. Are there any material differences that companies should be aware of from a Hong Kong versus Indonesia perspective when we talk about disclosures, and how should an Indonesian company prepare for complying with both sets of regulations?
So perhaps I'll just chime in relation to the ESG reporting. So in Hong Kong, the Hong Kong Stock Exchange has all along been doing various consultations and improvements to the listing rules itself to basically enhance the ESG reporting of Hong Kong listed companies. Now, obviously, we covered, when we talked about listing in Hong Kong, we can either go for a primary listing or we also mentioned about, Indonesian company coming to Hong Kong as a secondary listed issuer. So, and as Christina also mentioned just now, if a company is coming to Hong Kong doing a secondary listing, it is automatic. The listing rules automatically waive the Hong Kong ESG reporting requirements for secondary listed issuers. So an Indonesia company listed company can just totally rely on the what is required under the Indonesia rules. But if you're coming to Hong Kong as a primary listed issuer or dual primary listed issuer, then there are certain obligations or you need to understand the Hong Kong regime relating to ESG reporting. The exchange, as I mentioned, the exchange has gradually bringing the reporting standards up to the international standard. And back in June 2023, the IFRS Foundation International Sustainability Standards Board, they have also published various reporting standards relating to sustainability-related financial information and climate-related disclosures. And also, for Hong Kong, obviously, we embrace the international standard, and that's the reason why the exchange has also revised its rules to bring that the reporting up to the international standard. And that's why starting from 2025, this year onwards, listed issuers, they might need to think about disclosure relating to greenhouse gas emission, and that would need to be disclosed in the ESG report going forward. And in terms of the regime in Hong Kong, there's basically two levels of disclosure obligations. Number one, that's the mandatory disclosure. And number two, that's the comply or explain provisions. So in the listing rules itself, there is a whole chapter talking about ESG reporting. So it's more or less a tick the box exercise. And for those mandatory disclosure, obviously the company would need to disclose mandatorily those issues, those aspects in the ESG report. And for those comply or explain, like if the provisions, if the company choose not to disclose those ESG related measures, then the company just needs to explain the reason why the company does not think it's necessary to disclose a particular aspect, or maybe that particular aspect is just simply not applicable to the company.
Great, thank you. I think we can. Is there any final comments again?
Yeah, maybe just to also add the comments from that on the ESG reporting. I think from the accounting standard, it's also one of the difference between the Indonesian accounting standard and also the IFRS, because particularly on the point that was just highlighted, there is a new standard coming in 2025 with regards to the S2. And then this one, it's not yet implemented in Indonesia, but it's been effectively implemented under IFRS. So technically, it's an adjustments that needs to be incorporated for companies listed in Hong Kong. Yeah, so I think, yeah, that's also one of the difference with regards to the local and also the international standards.
Thanks. So the QR code is up there. I think we've got maybe 3 or 4 minutes to take some questions. So let's just run through a couple. So perhaps I think this one is more for the Baker McKenzie team. Is it possible to do a dual listing in Hong Kong through a backdoor listing, and then a rights issue on the back of that?
Yeah, as in theoretically, there is no restriction to that, but in the rights issue, in the local rights issue process, there should be, there is a prescribed timeline on that. There is a pricing mechanism that needs to be agreed, and there is a process. For example, if the local IDX LISCO files for the rights issue and then go to the IDX and OJK, at the same time, the same company will need to file to the HKEX, right? And the information will need to be relatively parity between those two documents. So the company will need to accommodate the comments or maybe revisions requested by OJK and IDX, but at the same time, HKEX may have some comments on the offering documents. So I'm not saying that it's not possible, but to my knowledge, there has been no precedent for the last maybe 5 years for IDX listed companies to do back rights issue and DR issuance. Yeah, but there are some challenges that need to be assessed by the advisors. Yeah, maybe those are some considerations.
Thanks, Azario. The next question is for an Indonesian fast-moving consumer goods company, will there be any lenient regulations to export market its products in Hong Kong consumer market? So I suppose the question here is whether a consumer sector company will have some sort of more lenient regulations in Hong Kong. I think we can say that the answer is no. It is we're not sort of yes, we're sector agnostic. We welcome all sectors to list on our market. There are specific listing rules for certain sectors, notably specialist technology or biotech, but that's a separate chapter or pathway to the capital markets. So for an FMCG company, it's the same requirements as any other sector. So there's no further questions. So in closing, I think I'd just like to make a couple of remarks. Thanks to our partnership with the IDX, the path to maximizing liquidity and unlocking capital from Hong Kong has been established. Timing, as was mentioned in the earlier panel, is absolutely everything in capital raising, and the Hong Kong markets at the moment are performing quite strongly, and can provide IDX companies with tremendous optionality. So I think with that, I'd again like to thank all our panelists, particularly the ones who are on the line with us for demonstrating the connectivity that we all love so much. And thank you to all of you for joining. I think the panelists are going to be around for a while, so we encourage you to ask any sort of burning questions in a setting outside, and just feel free to reach out to any one of the panelists or HKEX separately as well. So again, thank you very much, and I'd like to thank our hosts as well, the Hong Kong ETO and Invest Hong Kong for organizing this in their office. So thank you. Hope you found it useful, and let's continue the engagement. Many thanks.
Okay, thank you once again to our moderator and panelists for sharing this valuable insight. Okay, ladies and gentlemen, we have now reached the end of the event. We now invite you to stay and continue to networking with fellow participants and speakers, and we would also like to inform that lunch book has been prepared and are available outside. And on behalf of the organizers, thank you for joining us today, and we wish you a pleasant afternoon. Before that, we have to photo session together with panelist speakers and participants.
Yeah, definitely. Him first.
I'm sure you can see him.
Make sure you can see the camera.
Okay. You can stand on the table.
I can stand on myself. Whoops, by the way.
1, 2, again.
Yeah, once again.
Okay, my turn. 1, 2, 1, 2, 1, 2, and then a little bit. 1, 2. Okay, thank you, everyone.
Thank you, and again, on behalf of the organizer, thank you for joining us today, and we wish you to set up in the day.
Great.
Bapak dan Ibu, peserta yang lainnya untuk lunchbox bisa diambil di depan yang berada di dekat meja registrasi. Terima kasih.
Nah, bentar, nah, ini nggak bisa di.
Just your disadvantage to because when you mentioned so that's what's the yeah, AEI is not see. So yeah, it's all over as well. So yeah, it's the
Tadi gue lagi ngomongin gue sama dia. Gara-gara rahasia etis gue meeting. HK itunya sini. Nationality or HK invest? Yeah. So they help. So I met him in Indonesia Stock Exchange. Help one event here. The president delegation of Hong Kong, delegate from Hong Kong, and then I expect that's why because my name is association. Yeah, that's why. I don't know. I have to participate in every association is unique. Depends on figure and for the team. How that will generate growth. This is doing so. That's why I try to it's motivation. I tell my so many companies. The data we have reached like it's okay. Yeah, it's nice. Yeah, that's why I'm sticking with happy. No. That's how was less good they do the last piece to not to the next time. The ex-CEO of Indonesian. They use expect
Iya, harus di bawah tadi.